The Fed Vice Chair, Richard Clarida, joins me now live on the programme. Vice Chair, very good to have you, sir. Thank you. I appreciate you giving us time. We have much to cover. Let's start with where we are, in a sense. The worsening cases of coronavirus, what Dr. Anthony Fauci calls a surge, not a new wave. This is obviously going to change the Fed's thinking about the pace of a recovery, which was picking up steam. What's your latest thinking now we're seeing this surge?
Well, that's a good point. I think it is true, Richard, that after taking a huge hit in March and April, we did see evidence of the economy beginning to rebound in May and June, and that was very, very welcome. But you correctly point out we have seen an increase in cases in certain large states. You know, we're not epidemiologists, and we're following it closely. As we've said many times, ultimately, the course of the economy is going to depend on the course of the virus, and we're following it very closely.
But within that, I mean, is there a risk, if we look at the number of cases that are going up and we look at the sort of lockdowns that are taking place, do you have the right tools in place? For instance, if there were to be a double dip recession, is a double dip even on your horizon?
Well, look, we look at a broad range of scenarios. You know, it's not our base case. But of course, we look at all relevant eventualities. What I can say is, as your earlier clip indicated, you know, we have a lot of accommodation in place. There's more that we can do. There's more that we will do if we need to. And as you correctly point out, fiscal policy is an important part of this. And it looks like negotiations may well result in some additional fiscal support as well.
You say there are things you can do and there are things you will do. Is that your version of the famous whatever it takes?
Well, you know, Mario Draghi has sort of got the trademark on that phrase, the copyright on that phrase. What we will say and what we have said is when it comes to the size of our balance sheet, we make those decisions. There's no limit to how much we can purchase in terms of treasuries and mortgage-backed securities. You talked about the alphabet soup of programs. I think it's important for your viewers to know, Richard, these programs are meant to encourage and support the flow of credit to households and businesses in the economy, and those will remain in place as long as they're needed. So there's more that we can do, and there's more that we will do if we have to do it.
And on that alphabet soup, some of them are more esoteric unless you're actually in the market. Municipal bonds one, for example, some of the corporate debt ones. Some of them haven't been used very much. Is the idea here, the old traditional Fed idea, you know, you don't, it's like a lender of last resort. You hope you're never needed, and the mere fact you're there with these plans deters anybody?
Richard, I'm glad you asked that, because I think that's actually quite important. I think announcing that these are backstop facilities, so we really hope companies and individuals don't necessarily need to access them, but they are backstops if needed. And I think there's a lot of evidence that just announcing that the facilities are in place are essentially allowing private markets to function much better. And we think that's great. So these are backstop facilities, and if they need to be used, they're there. But I think we do see the flow of credit at good levels in many parts of the economy. So that's positive. On
the stock market, well, barely 4 months on, the Nasdaq's at a record high, the Dow's flirting again. Just about every economist we have on Cresswell's Business always says the same thing, which is, and perhaps you would have said it in a previous life, Vice Chair, which is, well, of course the market's high. The Fed is pumping so much liquidity. This is a Fed market. Now, it's not your responsibility to prop up the stock market, but that is the effect of what's happening.
Well, I think, look, our focus is now and always has been on putting in place policies that help us to achieve the goals that Congress has assigned to it, which is full employment and price stability. Obviously, our policies work through financial markets, and our focus is not on any one market. It's really on a broader question. Can companies get access to funding, to financing, so that they can stay open? We're providing a bridge to companies. We think that's important. And obviously, a lot of factors contribute to market prices. And so I'm not going to go into that. But our focus is not really on any particular market. It's on getting the economy back to full employment and price stability as soon as possible.
One more question on this area, and it really is the tools left in the Fed's toolbox. Now, the chair, to some extent, has ruled out, at least for the time being, negative rates. You've already got forward guidance well and truly in there. You're looking now yield management or yield direction. That's something that's not wildly popular. So what are these other tools waiting to be deployed?
Well, I think broadly speaking, we would put them into the categories of additional forms of forward guidance that the Fed has used in the past and that we consider using in the future. And also right now, our purchases of treasuries and mortgages are really focused on supporting market functioning. And there's more that we could do in terms of our balance sheet as needed. And then finally, during this critical time when the economy is recovering from the pandemic shock, we think these credit facilities in place are also providing important support. We've seen a decline in credit spreads and improved access.
Right.
So I think all of these together are part of a package that will be effective.
You talked about the mandate. We all, full employment, price stability. There are those now who say, as a result of Black Lives Matter, as a result of what's happened, that there should be a social responsibility element, almost adding in a requirement, for example, of minority employment. Do you support that? And if not, what do you support to add into that?
Well, Richard, we have a set of tools that really impact the overall economy. And so we have tools that can help to reduce the overall unemployment rate, for example, or help to support recovery from recession. Our tools are not so ample that they are able to be directed or aimed at particular or other social goals. But I think what we have found historically is that when the economy is doing well and when the unemployment rate is low, it benefits a number of different parts of society. And that's really our focus.
Right, but if I look at what the ECB under Christine Lagarde is looking at, they're very keen to look at how to incorporate minority support and underprivileged support as part of the ECB's mandate. Admittedly, a review's underway. We don't know how it will end. Do you think they will discover what you have basically said? It's easier said than done and perhaps best left alone.
Well, I think in our review, and of course, we devoted more than a year to a framework review that is still ongoing. We had a number, I think 15 Fed Listens events. And so we heard from a number of groups in society. And again, what we can do is provide a policy package that helps to get to maximum employment, that prosperity. And I think if we can achieve that, then a number, really all groups will benefit. And that really is our focus.
Last question, Vice Chair. Well, it's an election year. It's going to be very difficult. It's going to be very difficult for the Fed to put forward its policies without becoming enmeshed in the political back and forth in what promised to be brutal politics. How worried are you that the Fed will become politicized, whether you like it or not?
Well, Richard, I'm not worried about it. I've been now at the Fed for nearly 2 years. And what I've observed on the inside is that we have 17 members of the committee who are focused on one thing, and that's achieving our goals. And politics will not enter into our conversations or our decisions. I can assure you of that.
And when I say to you, sir, that the Fed is now the most respected institution, possibly maybe the Supreme Court, but certainly the Fed is up there as an institution. That's a barometer of integrity that has to be guarded jealously. Would you agree?
I completely agree. The Fed is an incredible institution. It's more than 100 years old, and has enormous resources in terms of talent and perspective, and it's an honor that I've been given to serve as vice chair for these last 2 years. But I agree, it's very important to maintain that credibility, and we will do that.
Good to see you, sir. I appreciate
Thank you, Richard.
I appreciate your time. I hope you and the family are well. Thank you, sir.
Yes.
Vice Chair of the US Federal Reserve.